Thank you, Tony. Now to the Q&A part of the meeting, where Tony, Anna, Elaine, Edwina, Shane, together with Scott, will be addressing a mix of your pre-submitted and live questions. A reminder that if you wish to ask a question, you can use the Q&A function on the right-hand side of the webcast panel. For the phones, press *1. That's star, then the number 1 on your keypad, and provide the question to the operator. Okay, we're going to our first question, which is from David, and it's about returns. So this one's for Anna. Anna, what are you doing to generate better returns?
Thank you, Steve, and thank you, David. So you just heard Tony mention that strong and sustainable long-term returns are a key priority of ours, and obviously a key priority for the investment team as well. I guess the key way we like to look at it is we like to look at areas of opportunity and then areas of risk as well. Shane has detailed a number of those key macro risks that we're keeping an eye on. Some other focal points in terms of opportunities that we're looking at include unlisted assets such as infrastructure and private debt. So we're looking to increase our holdings or add holdings in those areas. We're also, just with the risk of interest rates rising, we're working with our fixed income managers to better protect the portfolio against that key risk as well. So that's just a couple of examples.
Great. Thanks, Anna. The next question is from Sharon. And Sharon says, as a woman in her early 50s, what would be the best investment strategy to be best ready for retirement? Elaine, would you like to answer that?
Thank you. Thank you for your question. I think the most important action you should be taking as a 51-year-old woman ready for retirement is exactly what you're doing tonight with us, and that's engaging with AMP. That is important because in engaging with us, we can then help you get in control of your superannuation. And particularly as a woman, this is very important. It's well known that women generally retire with less superannuation, and we know through the research that we've done at AMP that is of great concern to our female members. Now, in terms of actions that you should be thinking about or could be thinking about, there are ways to increase your superannuation balance through additional contributions, voluntary contributions, salary sacrifice, perhaps spouse co-contributions, if that is something that you're able to do. That is definitely worth exploring, and I'll talk more to that shortly. And in terms of your investments, yes, absolutely. You should be understanding where your superannuation money is invested. Is your funds invested in growth options, for example, or more defensive options? And is that actually in line with your risk profile or risk appetite? And does that underpin the goals that you have for retirement? Now, that can seem a bit overwhelming, and where does one start? Simply, you could go onto amp.com.au, have a look at the Insights tab. There is a plethora of information available to you that will start to educate you. The other actions that I would highly recommend is getting in touch with one of our wonderful superannuation coaches. These coaches work with our members day in and day out, helping them understand and how to get in control with their superannuation. The other option available to you, and particularly because you are 50 or over 50 now, please avail the retirement health check service, and this will certainly help you understand what options are available to you, and you will meet some wonderful retirement specialists that we have that engage with our members and help them through this process. Now, importantly, everything that I've said just now is of no additional cost to our members at all. So if you're a member of the Signature Super Fund, please get in touch with us. You'll see contact details come up at the end of the Q&A, and give us a call, and we look forward to being of service and assistance to you.
Thanks, Elaine. That was a great question. We've got a live question coming in now from Michael about performance. So Anna, how has our MySuper performed versus peer funds?
Well, the good news is that last year our MySuper performance was extremely strong versus our peer set, which is great. In fact, it's had very strong returns over the period since inception, so back to 2014. And part of that is the design of the MySuper option. So it does place you, as I think we discussed earlier, in a higher weighting to growth assets early on in your career, so early on in your life. And that's obviously beneficial when markets go up, and beneficial over the longer term, as we do expect growth assets such as shares and property to deliver better returns over the longer term. So I guess in sum, it's been a good result so far.
Great, thanks Anna. We've got a question from Luke about cryptocurrency. So Shane, what is our position on cryptocurrency and does it have a place in superannuation?
Thanks, Luke. That's a really topical question at present. Cryptocurrency has performed exceptionally well in terms of providing returns over the last few years. Obviously, as the value of cryptocurrency has gone up, that attracts attention to it, which of course has been attracting more investment or speculation in the asset class, which in turn pushes it up in value. But there's a couple of reasons to be somewhat sceptical about it. I think we have to have an open mind, but still one needs to be a little bit cautious on this relatively new asset class, if you want to call it that. Firstly, it is called currency, but it's doubtful that many of the cryptocurrencies out there's about 10,000 of them, will ever actually be digital currency. Many of them are very expensive to transact in. They're extremely volatile. For example, the value of Bitcoin today is almost half what it was back in November. And it does have these huge swings. It's very slow to transact. And in fact, most of the transactions in Bitcoin are not actually with merchants to buy and sell things. They're actually either speculation on the part of speculators, or they're illicit activities as people trying to scam other people. And I sort of wonder, I've got digital cash on this phone here, it costs me nothing, whether I really want to switch over to cryptocurrency to do the same thing. Secondly, it's very hard to value. As an investor, you really need to get a handle on what it's worth as an underlying value. If you think about a property, it generates rent, and that's the payment it gets for the services it provides. And that enables you to put a value on that property. Likewise, with shares, they generate earnings or dividends, so you can value that share. You can't do that with digital currency or cryptocurrency because it's not a capital asset. So this leaves it as very speculative. It's very risky. And I think we, yes, have to keep an open mind on this asset class, but we have to be very cautious in assessing it. Now, that's not to say there's no value here. I think the blockchain, digital or decentralised finance, there's lots of opportunities in there. The trouble is separating that from the mania that is surrounding cryptocurrency at present.
Thank you, Shane. Our next question is from Wendy, and it's about North. So Edwina, why North and not other super funds?
Thanks, Steve, and thanks, Wendy. A great question, and one I'm understandably fairly passionate about. Look, North, as a wrap investment platform, North offers our members with a very broad range of investment options, very high quality investment options across a range of asset classes and investments. That includes sustainable and ethical options, as you heard in my presentation. And it also includes really good solutions to help you plan better for your retirement savings. We think it's a fantastic option for you and your advisor if you're looking for more choice. It also helps those members with more complex needs. Other benefits of North is it offers really competitive low prices, and it also has fantastic functionality to enable you and your advisor to stay on top of your investments. So it has fabulous, as a wrap account, it provides you with great online functionality and really good reporting on your investments 24/7. So we think it's a great option when you're looking at superannuation options.
Great, thank you, Edwina. We have a live question coming in from Michelle about market trends. So Shane, what do you see as the most important factors which will influence markets over the next 1 to 5 years?
Okay, thanks, Stephen. Thanks, Michelle, for that question. I mean, this is a fundamental issue in terms of the way we undertake our investments. So there's 6 factors, basically. If you think about growth assets like shares, property, infrastructure, they benefit from underlying economic growth in economies. That economic growth comes from technological innovation. And we've seen lots of technological innovation through the pandemic. We've found better ways to utilise technology, the very event we're seeing today. Those sorts of online events, webinars and so on have been made possible. Use of Zoom and so on have been made possible by technology. But they also contain the seeds of increased productivity. The continuing rise of Asia, I think this stands to reason. Many people in Australia already understand that because we are part of the Asian region. That is where the bulk of growth is occurring globally, and that's probably going to continue for this century. In fact, some people refer to it as the Asian century. Climate change, and this is a really, really big one. You can't get away from that. It's going to be critically important. And more of our members and the community around us demand that we assess those ESG factors that Anna referred to earlier in undertaking our investments. You can't get away from that. A rising trend in commodity prices. I mentioned in my presentation the example of electric vehicles and so on. This is just a fundamental reality here that over the last 5, 6, 7 years, we've underinvested globally in mining activity. We had the last mining boom, but that was almost a decade ago in Australia. But we've underinvested and we've come into a world where suddenly there's a lot of demand for metals and things and also energy. And that, of course, will drive commodity prices higher. The end of disinflation. This is a big one. Over the last 30 years, inflation has fallen, interest rates have fallen. We may be coming into a world of higher inflation and higher interest rates. Certainly, we've seen a bit of a spike in inflation lately. Hopefully that's temporary, but I think we've probably seen the end of that long-term downtrend in interest rates. And finally, geopolitical tension. We're hearing a lot about that right now with Ukraine. As the US has gone into relative decline as a global power, other countries are jumping in there. Russia, tensions obviously with Ukraine and other parts of Europe, tensions in our part of the world with Asia and the US. So this is a reality that we're in, that the geopolitical tensions are going to be far more significant going forward than they perhaps were over the last 20 years. So all of those things I think will be key drivers of investment strategy and underlying investments over the next 5 to 10 years.
Thank you, Shane. Lots to think about there. I hope that answered your question, Michelle. Our next question is from Edward, and it's about the trustee name. So, Tony, why can't the name of the trustee be changed to AMP Superannuation Limited to avoid being confused by the NM Super name holding AMP policies?
Thanks, Steve. Thanks for that question. It's a good one, and it is something that's certainly on our agenda. And the reason we haven't got to it yet is really around priorities, Edward, and that's because we've been very focused in the change program around those areas that are going to have the most impact on members' outcomes. So things like the separation from the life company originally, the change in governance practices, the efficiencies that have been generated through a lot of that activity and passing on those benefits to members, and the changes we've made around investments and the outcomes that are being generated there. So that big program of work has been the priority for us, but you're right, it is something we would like to change and it is on our agenda.
Thank you, Tony. The next question is from Indiana, who's asking about the early release of Super. So, Elaine, what does AMP think about people taking out their superannuation for support during COVID?
Well, we think that those monies obviously assisted people in what was a very, very challenging period of time. So we're very supportive about people being able to access those monies. For AMP, that equated to about 220,000 members who withdrew funds. Some completely emptied their accounts, and most of the withdrawals were with our younger members, those under the age of 35. So very pleased that it helped those members. Now we need to turn our minds to how we help people rebuild their super balances, because it's vital that people are able to retire as they, expect and with eroded superannuation balances, that just means that they're not able to maximise the benefits of compounding over time. So my team and I turning our minds to new ways of supporting our members, whether that be through the Super Coaches one-on-one conversations with members and giving them strategies to rebuild their balances, or through virtual seminars that we've been doing during COVID to people en masse. Again, just talking to them and making them understand how important it is when they're able, if they're able, to start contributing more to super and rebuilding those balances. So very pleased that the money was helpful. Now it's about us helping rebuild our members' balances so they can live the lives that they're seeking to lead in retirement.
Thank you, Elaine. It's a very topical question. Our next question is from John, and it's about AMP's future. So, Scott, what is your predicted future for AMP?
Yeah, thanks, Steve, and thanks, John. It's a great question for me. Look, AMP has a very strong future ahead of it, continuing on the over 170 years of strong delivery to Australians in terms of helping them achieve their financial goals and security. We have, over the last few years, completely transformed our business, every aspect of our business, that operates in growth markets, in superannuation, banking, and in platforms. So we're well placed in the right markets going forward. And as I said, we've transformed every part of our business, from governance through leadership, through culture. Our operations have been transformed. Simplification of our products, which we did last year, and Elaine talked to that earlier, which resulted in fee reductions. We've had fee reductions in the wrap products as well last year. So lots of benefits flowing through to members. And those changes will continue. We need to keep pace with the industry. We're very competitive and will continue to be very competitive. And most importantly, we have a great team at AMP to take us forward. You've met some of them today, but behind all of us is a very capable team that's continuing to transform the business and our services and products for our members and clients. Thanks.
Thank you, Scott. We've got a live question coming in from Nigel about fees. And Nigel's question is, how do AMP funds compare to the rest of the superannuation fund manager competition in relation to fees? So if I can go to Elaine first and then Edwina. Elaine.
Thank you. Good question. Well, according to our analysis, we're very competitive when it comes to fees. For Signature Super, on the 1st of October, we provided our MySuper members a fee reduction on average of 8%. And that on top of fees that we also reduced in 2018 and 2020. And then for our choice members, we provided fee discounts on average of 29%. So we are absolutely focused on ensuring that we remain highly competitive, and that will continue to be a priority for Signature Super. Edwina.
Thanks, Elaine. And yes, as I touched on in my presentation, fees are also a very high priority for North. Last year, we saw a reduction of fees across all of our products by up to 22%, which was a significant reduction of fees that were passed on to our members, for your benefits and to enable you to grow your savings over the long term. We are also very committed to keeping fees low and keeping very competitive in the market. We think our pricing is now some of the most competitive in the market for wrap platforms. Thanks, Steve.
Thanks, Elaine. Thanks, Edwina. Sabeth is asking about ethical investments. So I'm going to throw it back to you, Edwina. So the question is, what is North's position on ethical investments? Will there be a move to ensure all investments are considered ethical?
Look, a great question. I think we really understand the importance of offering a broad range of choice across the platform, including a really broad range of ethical and sustainable options for our members. So as we touched on, we've now added 80 ethical and sustainable options to our menu, and we're adding more. We intend to add more. That's out of a full range of 700 options. We also added the very first ESG managed portfolio last year, which was really exciting. And as you heard from us earlier, it's also received great accolades and is very highly rated with a superior rating from SQM. So we're really proud of that. Members will continue to have diverse requirements. Those members in our platforms have diverse requirements, so we will continue to offer a full range of investment options across different asset classes and investments, but ethical and sustainable options will be a high priority to include in our menu. Thanks, Steve.
Thanks, Edwina. An important topic. Okay, our next question is from Susan, and it's about uncertainty in markets. So, Anna, are the portfolios being reviewed more often due to uncertain economic times? And how are the review decisions passed on to investors?
Yeah, right. Thank you, Susan. So we review our portfolios daily, which sounds like an extensive process, but actually it's, we use a lot of automation and technology to do so. We try not to adjust our portfolios or tweak them too frequently, but in times such as we're in this particular week with Russia, Ukraine, all of those geopolitical tensions that Shane just talked about before, we are adjusting our portfolios live and daily, potentially, depending on the market volatility. I would say we do try, in a philosophical sense, to really focus on the long term, so we don't make drastic changes to your portfolio unless there are long-term risks or long-term opportunities that we need to take advantage of in a portfolio sense. So our focus is on the long term. I would encourage members as well to try to reduce the noise that is always present in markets and in media. We try to think about returns, market returns of less than 10%, negative 10%, as being noise really in the scheme of things. So it's very important, as Shane said earlier, to focus on the long term, but do rest assured that we are looking at your portfolio and the positions in them daily.
Great, thank you,
Thanks.
Anna. The next question is from Irving, and it's about the future of advice. So, Scott, given the deal for AMP Capital sale fell through, what is the future for wealth management and investment advisors who are managing our wealth and giving financial advice to us?
Yeah, it's a great question, Irving. Thank you. Look, the sale of AMP Capital didn't completely fall through. We did sell a significant part of that business in December last year, the infrastructure debt business. That leaves remaining the real estate business and the infrastructure equity business. And the board's announced a decision to demerge AMP Capital and the rest of AMP Group. And that's because they're very different businesses, and the interlinkages between the two businesses are minimal. So AMP Capital is a business that invests largely in infrastructure or private unlisted assets. And it deals with institutional clients, so large pension funds, global pension funds, super funds here in Australia, and large life companies, for example. So their customers are large institutions, and most of them are in fact overseas, most of the customers. So it's a very different business to the Australian wealth management business and banking business that deals with retail customers. And the separation therefore makes sense. It will allow AMP Limited, the wealth management and banking business, to focus a lot more and be purely focused on the Australian retail businesses and retail customers, and put us in a very strong position going forward. So in terms of advice, we're absolutely committed to face-to-face advice. And we, as you know, are a significant provider of advice through our advice networks and AMP Financial Planning and Charter and Hillross. And that service is incredibly important to Australians and incredibly important to our business. There's been significant change in the advice industry, and we've adapted our business, and we've transformed that, in the process of transforming that business even further. But we do believe strongly in the value of financial advice, and it's important to Australians, and important particularly in retirement. And we also want to see the opportunity to create more affordable advice for across Australia, and better access to advice. So it remains an important and strategic part of our business going forward. Thank you.
Thanks, Scott. Okay, next we have Hassan. He's got a question about investment choices. So his question is, can we select what type of investments our super goes to? So Elaine, may I throw to you first, and then Edwina for a comment too. Elaine.
Thank you for the question. Absolutely, you can choose where to invest your superannuation monies. In the Signature Super product, there are 27 investment options available to you, and a diverse range of options. Given we have a diverse membership, we need to be sure that we're offering options that will suit an array of risk profiles. What I would suggest to you is to access help through our super coaches to really understand what those investment options are. Additionally, you can go online on amp.com.au, and in the search function, just type Signature Super Investments, and there'll be links, and there's a lot of information in terms of fact sheets and guides that will give you very detailed information. But if you are interested in making choice, please spend some time with our super coaches who can help guide you and understand which investment options. Additionally, we have our intra-fund advice team that you can also access, that will also provide assistance to you. And of course too, if you do have a relationship with an advisor, please reach out to them. They'd be happy to assist you as well. So Edwina, I might hand to you at this point.
Thanks, Elaine. Look, by its nature, and I think we've touched on this tonight, by its nature, North requires you to make choice in terms of your investment options. There's a very broad range of options. So most of our members work with their advisors where their advisors help guide them to the best investment option for their life stage based on their risk appetite and their investment objectives. Yes, absolutely, a very broad range of choice for where you put your super. Please work with your advisor on that. If for some reason you don't have an active relationship with your advisor, please contact our North Service Centre, and they'll help put you in touch with someone. Thanks, Steve.
Thanks, Edwina. Thanks, Elaine. The next question is from Alex, and it's about governance. So Tony, what has the trustee done to improve governance?
Thanks for that question, Alex. And a lot of the changes that have been implemented around governance really occurred during the 2020 year, and we touched on those at last year's meeting, and I'll go over those again in a minute. So 2021 has really been about further embedding those and making sure that they are operating effectively, and I'm pleased to say that has been the case and continues in this year. But those changes really revolved around things such as the trustee having its own strategic plan around members and beneficiaries, and rather than adopting an AMP plan. The refresh of the board. We have a board of 7 directors, all non-executive independent directors. Some of the structural changes that were in place meant that the relationship between the trustee and the AMP service providers is much more of an arm's length nature now. An important one too has been the accountabilities that are in place. So as a trustee, we have direct authority and oversight of accountabilities of the key people. Some of them are presenting today in terms of what they need to be delivering. So a lot of our time is actually spent overseeing the delivery of that and the meeting of those accountabilities and targets. So all up, there's some of the key things that, as I say, happened in 2020 effectively, but have continued to be embedded and come to the fore as an important part of our governance arrangements in 2021 to really ensure that we remain autonomous and independent, and all the decisions that are made in relation to the superannuation funds are in your and members' best financial interests.
Thank you, Tony. The next question is from Dana, and it's about super regulations. So, Scott, could you explain some of the recent regulatory changes to super and how they impact members?
Yeah, thanks for the question. Yeah, there has been some big changes, particularly last year, to superannuation. Maybe not so noticeable to individual members, but particularly if you're with a high-performing fund like AMP. But Your Future, Your Super was introduced last year, which had a number of components, but two that I think are seismic for the industry, quite frankly. Firstly, the annual performance test, which really creates transparency and holds superannuation funds to account. It's basically set up so that each fund has a set of benchmarks that has to exceed. And if they exceed, they get to continue on. If they fail, they need to write to their members and tell them that's the case. Stapling is another big change for members. Again, not necessarily obvious at first understanding, but what it means is that your super fund today is stapled, essentially it's called stapled to each individual member. And so as you move through life, as you change employers, the fund you have today will continue with you unless you choose to change that fund. That's really important because it improves, it stops multiple accounts and improves the efficiency for members and engages members more in the superannuation journey that they're on. As Elaine mentioned earlier, we passed the performance test this year, and that was a very pleasing result that we had in that first annual performance test. The federal government is going to continue to improve regulations for the benefit of all retirees, all savers and superannuation. And there was a number of smaller changes that have just been passed this year, again late last year and this year. Smaller changes, but still important changes, such as the removal or partial removal of the work test for those between the age of 67 and 75, so they can continue to make concessional contributions or salary sacrifice contributions to their superannuation up until the age of 75. And this is going to continue. The government has an agenda, both sides of government, in fact, have an agenda to improve the superannuation system, so we can expect further changes. And we'll keep you informed of those changes as they occur. Thanks.
Great, thank you, Scott. The next question is from Chris, and it's about ethical investing. So, Anna, what are AMP's policies and fund member options regarding ethical investing, such as carbon neutrality, labour standards and fair trade?
Thank you, Steve. And look, it's great to have so much interest in ESG and responsible investing. We've talked about the fact that we have a responsible investment framework in place. It encompasses our policies regarding all those items that were asked about in the question. I think probably the best thing to do is to head to our website where all those policies are published and you can get the full details on how we approach things like labour standards and all that sort of thing. We also have our annual modern slavery statement, which is on the website as well. And so that one looks at how we identify and address any risks across our investments or indeed our operations or supply chain when it comes to the potential risk for modern slavery. So that's probably the best place to go, I'd say.
Great, thank you, Anna. The next question is from Marijana, and it's about retirement, probably a question a lot of us are asking. So, Elaine, how much do I need to safely retire?
Yes, it's such an important question, and I think it's a question that every single member at AMP Super will ask at some stage. And look, the answer really depends on a number of factors. You know, how much you have in savings, what are your goals and your plans for retirement, and just how long will you be retired for. The first step that you should take, it's a simple one, is to access our retirement calculator online. It's free to access. It will simply guide you through a range of questions and will estimate how much you should have in retirement. And that will do two things for our members. One, it will give you confidence that you're on track to have the options that you're seeking in retirement, or it might suggest that there's a shortfall or a gap. And the most important action for you to take, if that's the case, is starting to think about putting a plan in place to close that shortfall. The next action for you is, and I've talked about this in the last two questions, but it's so important. If you are 50 and you've not thought about retirement in any great degree, then please reach out. We want you to do a retirement health check with our retirement specialists. If you're 55, then you should be availing our intra-fund advice service, our transition to retirement service. And that's really important because it will certainly make you understand the options that are available to you, even help you start to think about how to open a pension account. And as I said before, those services are at no additional cost, and just really critical to give you confidence that as you transition to retirement or as you enter retirement, you're doing that in a manner that you're expecting and want. Thank you. Thank you, Steve. Back to you.
Thanks, Elaine. Great answer. The next question is from Georgina, and it's about fees. So, Elaine, I'm going to come back to you. What actions are AMP taking to further reduce fees charged on members' super balances?
Yeah, I think Edwina and I have both talked about fees tonight, and the commitments are from AMP that we will remain absolutely competitive when it comes to fees. We know the critical correlation between low fees and positive returns for our members, so we will continually look for ways to ensure that for our members our fees are very competitive in relation to others in the market. It is why there's been such emphasis from us at AMP in driving simplification through our business, because in doing that, it lowers the cost to serve and it means that we can pass those benefits back on to members. So the commitment you're hearing from me is fees will always be a priority for us, for our members.
Thank you, Elaine. We've got a live question coming in from Thomas, and it's about the situation in Ukraine. So, Shane, how exposed are the AMP funds to risks arising from the breakout of hostilities in Eastern Europe?
Look, the situation in Ukraine has obviously deteriorated in the last few days, with Russia talking about sending in a peacekeeping force into parts of Ukraine, and obviously that has led to more uncertainty in investment markets. So the main impact on our funds comes from the uncertainty and the volatility you see in investment markets as a result of the uncertainty around where this conflict goes. There's a couple of issues here. Obviously, no one wants to see a war. Whenever a war breaks out, it can have an adverse impact, particularly on growth assets, and investors seek the safety of, say, government bonds and assets like gold, for example. By the same token, there's also concern about the extent of sanctions being imposed on Russia and the blowback impact of those sanctions on Europe, for example. If sanctions are imposed on Russia, obviously that pushes down the Russian share market, which we've already seen, but Russia may retaliate and say, well, they're going to cut off oil supply, or gas supply rather, to Europe. There may be also an impact on the supply of oil, and also upwards demand for oil as there's less gas going into Europe. So all of these things are creating this volatility, and that's the main impact we will see in our funds. And obviously there has been some fallout in share markets in the last few days in response to this. Putting global shares, for example, back to the lows we saw in January, Australian share market has been somewhat more resilient. Now, I should point out the direct exposure, my understanding is the direct exposure we have to, say, Russia is relatively low in the great scheme of things. Yes, there will be some exposure in some of our very small parts of our funds, but it's a relatively low exposure. The bulk of the impact comes through the impact on share markets. Now, what I would say, and this is critically important, it's a bit like that chart I had, which goes back to 1900. If you go through time, there's been lots of events like this, world wars, worst of them, 9/11, financial crises and so on. There was a study undertaken, which I've included in a recent note I put out, which looks at a range of about 30 events going back to the 1940s. And it's always the same. You see an initial fall in share markets, average decline is about 6% or so, can be a bit more, can be a bit less. Then over the next 3 months, but usually invariably over the next 6 months and 12 months, you see a rebound in markets. Try to predict the timing of these things is very, very hard. Russia could just back down and suddenly it all vanishes. But what I think the key is for investors, and that's what we're looking at, is the opportunities that these sorts of events provide. Because as share markets go down, they become cheaper, and that's usually a better entry point into growth assets like shares. So yes, it's an uncertain time with this conflict in Eastern Europe. Hopefully it's resolved quickly, but the historical impact on share markets is pretty clear. Initial dip and then a rebound, usually over the next 6 to 12 months.
Thank you, Shane. Interesting times. And on that note, we're going to conclude the question and answer part of our meeting. If we haven't had time to get to your question, a reminder that we'll be publishing responses on our website together with a recording of today's meeting. To make it easier for you to access answers, we'll be grouping your questions into related themes. These will be available on AMP's website via the following URL, amp.com.au/AMM. We will publish this information within the next 30 days. If your question is of a personal nature, one of our member services team will be in touch directly with you. Also, a reminder of some of the resources we make available to you and where you can access these. You can organise to speak to a super coach by using your phone to scan the QR code on the screen. You can also access a range of helpful information on AMP's Insights Hub. We publish articles and insights on super, retirement and wealth issues. We would also love your feedback on this event. If you have your smartphone handy, scan the QR code on screen now. Phone attendees can provide any feedback direct to the operator. On behalf of Tony, Elaine, Edwina, Anna, Shane and Scott, thank you very much for joining our meeting and your continued support of AMP. We'll leave you with information on screen about how you can access some of the help and resources we talked about today. Thank you.